When is the best time of year to retire from Phillips 66 and ConocoPhillips? For most people, the answer is pretty straightforward. It's going to be right after that next VSIP payment or RSU vesting. So that's typically in late February, potentially early March. If you can choose your date, here are a few of the biggest caveats. So the biggest drivers are really your age, your years of service, which pension plan you're on, and your salary grade level. If you're 55 or older with at least 5 years of service, you get a lot of unlocked flexibility. There's a couple meaningful benefits that the company provides you. You generally receive prorated VSIP, two of the three tranches of RSU. And then third, you can coordinate with your supervisor to vacation out as far as the current calendar year. But all that to say, you don't have to wait until February or March if it doesn't fit into your plan. Next is pension timing. If you joined P66 or Conoco or even a subsidiary before 2002, you likely still have a heritage pension benefit. Even if you moved on to the cash balance plan, you probably have a frozen benefit in one of those plans. And what's interesting or notable about these is they're really interest rate sensitive. So, in general, if interest rates go up, your lump sum value comes down, and vice versa. If interest rates go down like they are today, your lump sum goes up. And the mechanics to calculate the benefit are using your benefit commencement date, which is the first day of the month following your employee end date. Let's say you retire anytime in March, April 1st is going to be your benefit commencement date. However, you do need to start this process by mid-month. So the 15th of the month before your benefit commencement date. And even a quarter percentage rate move can really shift your pension by 5 and 6 figures. The issue, though, is that no one has a crystal ball. We don't know exactly where rates are going to go. Generally, we have an idea of the direction. It's more so the timing that's difficult. And if you're otherwise financially independent, my advice would be to move on, know that you may be leaving a little bit on the table, but also that your life and time is finite as well. Last thing, most of these benefits you're eligible to commence at age 55, so that's the whole golden handcuffs, but you don't have to commence your benefit until age 65 in most cases. So you do have some flexibility if you're willing to let it ride, but I don't see this a lot in practice. Interest rates could go up forever, and so there's a risk that you have to be willing to take. All right, last but not least, let's talk about the high earners. So this is not going to be applicable to everyone, but if your compensation's over 350,000 SGL 18 or above, you start to get access to the non-qualified plans. There's three at Phillips 66. So there's the KEDCP, the KESRP, and the DCMP, and they all have slightly different rules. The way they're funded is different. By default, payouts for all of these occur 6 months after retirement. So if you retire in the first half of the year, by default, those non-qualified plan payouts be received in the second half of the year, and you may have prorated VSIP, compensation, RSU vesting, the non-qualified plans. That could equate to a really high tax year. On the non-qualified side, it's all about managing your taxation and when you receive this ordinary income. But like I said, the default is 6 months. So on the KESRP, I don't think there's anything you can do about that one. You're going to receive that one 6 months later. And so you're going to have to put that in your calculation in terms of whether or not you want to shift that money into the next year, and therefore you need to retire in the second half of the year. Now, the KEDCP and the DCMP, you're able to shift when that money is received. So instead of the 6 month default, by at least choosing the 12-month option, you know that it's going to therefore be in the next calendar year. And it's not going to stack on all the other income you get in that last year of working. Okay, so I know that was a lot. Here's a simple decision flow. If you're under 55 and on the cash balance plan, then I would target early March, right after VSIP and RSUs. And then retiring earlier in that month gives you that medical coverage through the end of the month. If you're over age 55 and have 5 years of service, again, you unlock being able to get the prorated VSIP, vacation out, and some of your RSU tranches. You don't have to wait until that next February or March if you don't want to. And then the last two pieces to just keep in mind is if you're on the Heritage Plan, you really want to watch the segment rates because your pension is highly dependent on that benefit commencement date. So that's where retiring on March 31st versus April 1st could have a massive impact. And then lastly, for the high earners, again, with the non-qualified plans, you want to know not only how much is in there, but when it is going to be paid out to you. And therefore, you can try to avoid stacking that in one of your highest income years to make that tax impact even less. So please ensure that you've contacted or worked with a CPA or advisor to really make the decision that's best for you and your family. Things can obviously change, and this video is going to remain static. Please don't solely rely on it. I also have a couple other resources out there, a P66 specific page where I will update information over time. I've been through this process with a lot of families, but specifically, I started my firm to work with Phillips 66 and Conoco employees and retirees. Feel free to reach out. If I can help you, great. If I can point you in the right direction, that's great as well, but would be happy to have that conversation.